I can't even open my YouTube or X or any platform without seeing some kind of a video on the dot-com bubble and on the AI stock bubble, and we're gonna have some kind of a bubble popping in AI. It's gonna be worse than 1999 dot-com bubble 2.0, and I'm seeing it all over the place. And I posted a funny joke on X. I said, "There's an AI bubble every 6 months, guys. Don't you get it by now? Every 6 or 7 months, we have DeepSeek come out, some kind of model come out, and all the people on YouTube start saying this is a bubble.com 2.0 because it gets a lot of views on YouTube, it gets a lot of attention, and people get scared away. A lot of those stocks, they start going down, so people believe it's real, the bubble is popping, they sell the bottom or they ignore the stocks, and once they recover, they say, oh, I should have not have been getting caught in a narrative, and I should have looked a little bit more. And I think this is another time. I don't believe this time is different. I don't think the AI bubble is popping and we're going to have something worse than 2000 and 2026. I'm going to tell you why and talk about it more in today's video. Now, the reason why a lot of people believe that this time is different is because a new model came out called Kimi K3, and this model, Kimi K3, is apparently much better than Claude Fable 5, which was taken as one of the best models, where Kimi overtook Claude and overtook ChatGPT and overtook Grok. It overtook all the United States AI models, and it's at a fraction of the cost per token. So that's really getting a lot of attention, and people believe again that China will pop the AI bubble. But we've also had that like a few months ago. We had a Kimi 2.6. Kimi 2.6 was much better than GPT 5.5. It was a little bit better than Claude. It didn't get as much attention as this one is getting right now for some reason, but we had that a few months ago, and then the United States companies innovated and they overtook the Kimi model, and we had very good models until the newest Kimi model came out. So this is really not anything new. But what's really different about this one and what's getting a lot of attention is the fact that on July 27, this company will give away Kimi as an open source model. So any company or government on earth can download it and run it on their machines. No subscriptions, no permission slips. They're just giving it away for free pretty much. You download it on your device or host server or whatever, and you can operate it on your own. You don't need to pay ChatGPT or Claude. You can run your own kind of open source model on your device, and you don't have to give your data away to China or some other provider because you're kind of owning everything that's happening. Now, that really sounds terrible for a company like Claude or OpenAI because you don't have to pay them. You own your model, you do everything on your own, and you keep your data secured. So why would you pay OpenAI or Claude? And people are saying the bubble is going to pop. But there's a few things that a lot of people are not talking about. The first one is, yes, Kimi is much more efficient than other models, but I've read a lot of studies from Sumi Analysis, which is one of the best Sumi analysts, and he said if you download it on your device, the cost of running it, especially on the Blackwell chips of NVIDIA, is going to be much more expensive than what a lot of people are saying. So yes, you could say the model is more efficient, it's cheaper if you're using the Kimi website. But if you're downloading it as an open source model on your device, it's not as cheap as a lot of people believe. So Kimi is not really making a lot of money. They pretty much make little to no money from giving it away as an open source model. They make the money when you go on the Kimi website, pay the subscriptions, use their tokens. This is how the company is making money. Now, when you're using the online website of Kimi, which is a Chinese company, you're giving away your data to China. If you want your tax returns to be done, you're giving your tax returns to China, you're giving your social security to China, you're giving your locations to China, you're giving pictures, personal information, you're giving a lot of data away to a foreign country, especially regarded as an adversary to the United States. So do you think the United States is going to allow that to happen forever? For you to go on some kind of a Chinese website and give away your data? China doesn't allow it. That's why a lot of the US companies, social media companies, they're restricted in China because you're giving away some critical data. But it's even worse when you're talking about tax returns and locations and other kind of things. So I believe over time there will be more restrictions on DeepSeek, more restrictions on those online websites like Kimi. But again, the counter argument is that no, but they just give it as an open source model. Well, if the biggest customer for Kimi and all of them are likely US consumers paying on those websites, and those websites are restricted, how is Kimi gonna make money to keep doing all those open source models? So for me, no one's really talking about this. Everyone's talking about it's just an open source model, you download it, and there's no privacy data concerns. Although I believe there's likely some kind of privacy data concerns, even if you download it. But when you download it on your device, it's not as efficient to run as if you're using their website. But if you're using their website, you're giving away your data to China. So I still believe there's some kind of a national security protection to a lot of those companies like Google's Gemini, like Grok, like Claude, like ChatGPT. I don't think this model will really destroy them or take their valuations down like crazy and they can't make any more money. I'm personally not seeing it. I think it will level up the competitive field a little bit more. It will cause them to compete much more, maybe lower prices a little bit, which is ultimately good for the consumers. But I don't think this will really pop the AI bubble in general. Now, I believe there's some excess in the market. I think there's some excess in certain stocks, mainly the neoclouds, which I was bearish on, like Iron and CoreWeave, and even Nibius, although I was a little bit wrong on Nibius. But I think a lot of those companies are kind of selling a commodity, and every few years they have to keep, replacing the GPUs. Now the market is tight in terms of compute, but we don't know how it's going to look like 5, 7, or 10 years from now. I think there was an excess in this area. The excess has been corrected. The valuations are much better. And there's still some excess in the valuations of OpenAI and Anthropic trading at $1 or $1.5 trillion, which is really, really big. But I believe there's only one thing that can pop this AI bubble. And it's not going to happen in 2026. Could potentially happen in 2029. And this is any kind of ban, any kind of restrictions on data center buildouts in the United States. A lot of people in the United States are against data centers. They believe data centers consume a lot of water, although not all of it is true. The latest technology has not been consuming as much water, but they also consume a lot of electricity, which is somewhat true. New York State was the first state to put up a nationwide ban on those data center constructions. Other states, even in Florida, the governor is not too happy with constructing data centers. He said there's no jobs after you construct them, it's just the computers, and it's wasting away a lot of the energy. So a lot of people are against data center buildouts in the United States, and people believe AI is taking their jobs. Now, if we have a different administration in 2029, and we can no longer build data centers in the United States, we can no longer invest as much as we're investing right now, then you could say the AI bubble will pop, because the demand for cloud OpenAI will start to slow. They can't spend as much on semis, and the semi stocks like NVIDIA and even AMD and others that have all those contracts with OpenAI and Anthropic will start to suffer, and the companies relying on AMD and NVIDIA will start to suffer. And then you have the whole circular financings that we talked about, from OpenAI all the way to Oracle with a $300 billion contract, into Intel, into CoreWeave, into Nibius, Microsoft. All these things could potentially collapse if we can no longer keep investing in more capacity and in more data centers and in more AI innovation. As long as we can keep investing in AI innovation, the United States and all those companies are not going to just wave the white flag to China and say, okay, you won. We're going to stop spending on semis. We're going to stop innovating. We're going to stop doing all these things. As long as this is not stopping, the AI bubble or the AI rally, I don't think it will stop. The AI rally will stop whenever we can no longer invest in such capacity. And the reason why we can no longer invest is if we have very strict and tight AI regulations from a different administration after 2028 into 2029. So therefore, I think this dip is a buying opportunity. A lot of companies are not in bubble territories. I posted something on X. I said the AI bubble is getting out of control. Nvidia is now trading at a whopping P of 20, and the company is growing 50% earnings per share. So a lot of companies are not in bubble territory. They're not as expensive as you think they are. Yes, some companies are up there in valuations. The Neo Clouds were up there. Some of the LLMs are up there. But I don't think China will just destroy everything with the open source models. And I know it's hard to ban the open source models, but I would not be surprised if the US government finds something to do around it, because there's still some data concerns. You're giving your data to China, and those companies don't make their money from giving away open source. They make their money the same way Claude and other companies make their money. So if they want to make money, they're going to have to sell those things online on the Kimi website. But if you're using the website, you're giving away a lot of the data, which I don't think the United States is going to allow that to happen forever. So the whole thing to me doesn't make sense. I don't think China will pop the AI bubble. I think it will introduce more competition, which is healthy, and it happens in every cycle. Could cause the companies to lower prices or to be more innovative, and that's good for the consumers. It's good for everyone. But I don't think the AI rally is stopping anytime soon. I think it will stop once we can no longer invest in AI. And I think that will happen if there's massive restrictions on AI spent in the United States by a different administration, maybe in 2028 to 2029. So that was my opinion on the whole AI bubble and China and all these things on YouTube. I hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.